All right. Well, I hope everyone enjoyed the presentation so far, and I hope everybody had a chance to listen to the key messages that we've been delivering throughout this presentation, as well as since our IMS for Q4. I did want to highlight one thing that was excluded in the one of the final presentation slides, the aspiration slides, and I just wanted to make sure I underscore it here. It's in the downloadable deck that you can get online, and that's available both from the attachment on the OSC notification we made earlier today, and it will be obviously updated in the downloadable section on our investor relations website for this webcast. But I wanted to reiterate that we're on track for achieving our aspirations that we previously communicated for a 20% or plus growth rate by the end of 2021. So we feel very good about that. Aspirations are intended to be forward-looking, and the good news is that we're executing on our aspirations. We do expect annual growth rates to exceed 30% from 2022 onwards. And just underscoring that one more time, the way we unlock growth there is through a multi-pronged approach to the marketplace. Obviously, it starts with product strategy. We've been investing in our product strategy, building our products to support that kind of growth. And then adding on top of the product strategy at the right time is bringing the partnerships to the table that can get us access to the market that we want to achieve that growth with. There's been a couple questions about this during the course of the webcast, and if we have chance, we'll go into it a little greater detail. But I wanted to underscore that it's the product strategy combined with the go-to-market strategy and the partnerships that together unlock that next level of growth. So that's what we're communicating here. And we think we're putting some numbers on the table from an aspirational perspective that's quite positive. If you take that in combination and set an expectation there, we do expect that annual revenues can achieve $100 million in revenue by the 2024 to 2025 timeframe. So hopefully everybody got a nice overview of that. So looking at the Q&A that we have so far, we have a number of questions that have come in during the course of the webcast, and I'll take the first one. Let me see if I can summarize it. I have about 4 or 5 questions on a similar topic. What does the partnership with Silicom mean for you, and what kind of revenues can you expect from Silicom? Will the Silicom FPGAs, Intel-based cards, open the door to the 5G markets or others? And if you can answer, did you already secure any design wins with Silicom? So just a quick commentary. I've communicated a little bit about Silicom in the prior session, but first of all, we're super happy to have this partnership with Silicom. It's super meaningful to Napatech, and I guess you guys know it's easy to say, hard to do sometimes. Relationships take time. We have a relationship. We've had a relationship with Silicom really since the day I walked in the door at Napatech, and we've been building on that relationship with Avi and Shaika over at Silicom really ever since. And we're super happy to have them as part of what we consider our partnership community of great companies. We're porting our software that we have running on our hardware over to their hardware solution, which is an Intel-based hardware solution. And this is intended to be part of the success of this potential partnership. It's a win-win. We intend to get access to the virtual data center and service provider opportunities through this relationship by harnessing the Silicom relationship in that particular market through their hardware initiative. This is part of their go-to-market program. It wouldn't be right for us to comment on what the potential revenue of this opportunity could be. We're just getting our legs under us in terms of bringing this to market, but we are optimistic about the potential for revenues here in late 2020 and beyond, 2021 and beyond. And but we're just getting it started, and we're looking forward to working with the Silicom team to bring to the market with Silicom what we believe is the top performing feature-rich solution to address that part of the marketplace. So we've been communicating this since the Q4 IMS about our strategy around partnerships. It is a very important part of our strategy going forward. The Silicom relationship is clearly aligned with that partnership strategy. and it's served us well in the recent past, and we expect to make Silicom a success through our partnership with Silicom. We don't have any design wins to announce at this point in time, since we've just started the relationship with Silicom. And obviously, once we make some progress there, and obviously with consideration of what we can communicate with this relationship, we will endeavor to communicate that to the capital markets. So that's the first question. We've had there is a couple other questions regarding Silicom. I'll come back to those if we have some time. So I just want to keep moving forward. Manoj, you had a great presentation, obviously spurred a couple of questions along the way. The next one I think is more kind of in your neck of the woods, and maybe Jarrod, you can comment about this as we get into it. But here's the question. Knowing that Microsoft and Amazon are included in the programmable NIC market, how should we see the Napatech addressable market evolving over the next few years, given that Microsoft makes their own solution and takes up so much of that market? Does it make sense to remove them from the market? Manoj, could you help us with that one?
Yep. Am I audible?
Yes.
Okay, awesome. So that's a great question. So when we track a particular market, we track that market very comprehensively, including all players and the total opportunity for all the vendors who play in that market. So in this particular case, Amazon and Microsoft are, I would say, pioneers in this space. They actually show the world how to use programmable adapters at scale to optimize their compute resources for large-scale deployments. And it is just that they manufacture or they optimize their designs both on the hardware and software side. And basically, the hardware gets manufactured by a third-party manufacturer, an ODM or a contract manufacturer, and they deploy these NICs on their data centers with their own software. So I would treat this as a high volume, low margin market opportunity where there is a high barrier to entry. So when I look at the market as an overall perspective, I think it is best to include Microsoft and Amazon as well. And as I mentioned in my presentation, the programmable NIC adapter is a very nascent market, and the technology disruptions are happening in this market on a weekly basis or a monthly basis. So, and the technology disruptions can come from companies irrespective of their size. So if there is a attractive proposition from either on a hardware or on a software side, even if it comes from a smaller company, I believe that will be an opportunity that even Microsoft or Amazon would be an opportunity for those companies. So that's the reason I would take a comprehensive view of the market than isolating Amazon and Microsoft.
Thank you. Thank you for that answer. Jarrod, curious, would you like to add anything to that? You're muted.
Hey, thank you for that. No, Ray, thank you. I don't think too much that. I would just echo the fact that that within this market, those large hyperscale data center operators were the pioneers, and they built their own solutions because there were no commercially available offerings. Now, as a few years have passed, and it's become not only deployed and successful at scale, and networks of all types across telco, edge computing, tier 2 cloud, and even enterprises now are mimicking these designs to get the same benefits out of their network. Commercial vendors like Napatech have come along to service that demand, and now we're in a position to provide solutions even for those hyperscales who once didn't have them. So I think it's right that the industry analysts like Omdia and most others include the full demand within their forecasts and market measurements.
All right, super. Thank you for that. Just jumping into the next question. This one also feels like it could go towards Manoj. Your investors want to get some sense of volume versus price. Why will volume increase over time for programmable smart NICs? And as the market grows, why won't prices plummet? Is that factored into the market share, market mix in the future? So Manoj, I'm curious if you could comment on that.
Yeah, absolutely. So yeah, there is actually the economies of scale playing out, but one need to understand that there are two components in this particular space. One is actually the hardware, and the second one is the software part of it. And obviously, a good solution need to have a very tight integration between the hardware and software to provide.
All right, technical difficulties. We lost Manoj, or maybe Manoj has disappeared. So that's it was a good start to the answer. And so Jarrod, we get this question from time to time also in terms of stability around price in this particular market as volumes increase. What's your point?
Yeah, thanks again, Ray. It's much like any market, especially in tech. Companies like Napatech have a portfolio of products that span the price performance curve. There are market segments and applications being deployed that require a solution where the configurations scale into the $5,000-$10,000 type of range. There are market segments like hyperscale cloud and telco deployments, especially for 5G, where a typical deployment could be 10, 25, 50, even 100,000 units a year or more. And in those configurations, they actually require a different product. So in our portfolio, these are part of the investments we've made over the past 2 years to be able to service these new markets where the cards do sell at a lower price. They can be as low as $1,000, but they're designed and engineered for these markets and still preserve the great margins that we have that come with the combined hardware and software solution.
All right, super. Thank you for that. And we've guided our aspirations around 70% gross margin over the aspirational period for that purpose, and we feel very strongly about that. And as product mix changes, keep in mind that will also have an impact on our ability to maintain gross margins, as our software products will be combined with our software hardware products, and will continue to drive gross margins in the right direction. So we feel pretty good about that expectation that we've set. I don't see Jim Dworkin on the line. So yes, I see Jim is there, but Manoj is gone. I hope we get Manoj back, but we have plenty of questions to cover. So I think this one may be going in your direction. Hey, welcome back, Manoj. So Jim, this is, I think, going to go in your direction, and maybe Jarrod, you can follow up on this one as well. It says, can you talk to the competitive nature of each of the competing FPGA architectures, like the SoC or the ASIC? Given that Intel has solutions that span FPGAs, ASICs, and ASIC-based NICs, how do you see buying decisions taking place by customers that need programmable smart NICs versus other solutions? Jim, do you have a point of view on that?
Sure. Thanks, Ray. Can you all hear me okay?
Yes.
It's hard to tell if there's a delay. Okay, so yeah, thanks for the question. As we've noted in the past, SmartNIC solutions can be built. Well, SmartNIC to us is defined as having either a CPU or an FPGA or both. So it needs a compute element. And as you can see from the presentation I gave, we have a platform approach to the market for cloud driven out of our FPGA group, which I'm a part of. But Intel has a number of different solution types in its portfolio. So as you mentioned, SoC slash ASIC, we have a very strong leadership position in the Ethernet products group overall, with foundational NICs leading into SmartNIC. So we have some exciting future products on the roadmap coming. So you'll see different solution types to address the growing SmartNIC market segment itself. So we make decisions on that based on the market segmentation, based on the success that we've had in the market and the existing customer engagements and customer relationships that we have. What do we see as the requirements and the care-abouts and the buying patterns of the next wave? Jarrod mentioned tier 2. We call them next wave cloud. We also see the cloudification of the telco space coming, where the telcos want to increasingly compete in the cloud computing space. So those requirements kind of blend between telco and cloud. So there is no one size fits all SmartNIC solution today, which really creates a climate of maximum, I would say, utility, maximum value of the FPGA due to its hardware reconfigurability aspects. And then in the platform that we've built, adding in that standard Xeon D Intel architecture CPU right alongside tightly coupled to that FPGA has just been a killer combination. Really, it just makes that an ideal solution for the market at this time. Now, the market will evolve. We look at, actually do our analysis across a 10 or even more year horizon, and there's some really interesting dynamics coming that we haven't even been super vocal about publicly, but we have been working privately with our customer base. Okay, so again, really just want to reiterate the happiness to be partnering with companies like Napatech. I like the software solution, and I just a quick note, Ray. Sorry to take a long time with this answer, but to answer the question about the go-to-market strategy and the partnerships. Our strategy is to do what Intel does best, and that, in my mind, which is platform enablement, reference designs, and that's what this cloud platform for SmartNIC is all about. We have solution integration partners like Silicom that produce orderable products for the end customers. We're very happy to see the partnership between Napatech and Silicom. We are in the process of onboarding more, and we have strategy to onboard more solution integration partners that will create the end product, orderable product that the customer will buy. So we'll see how that all plays out in the future, but we certainly imagine in our go-to-market vision a wide set of ecosystem partners that are creating and customizing these solutions for the end customer. And then sort of back full circle to the subject of the question, it could be based on a range of different Intel technologies over the long term. But in the short term, the FPGAs have been winning and winning big, and that's why we created this platform, and we think that that's the right one for the time.
That's really great, and thank you very much for commenting about the relationship with Silicom in the midst of your answer. If it wasn't for Intel establishing that platform, we would not have the ability to create that strategic value in the ecosystem that you guys are ultimately developing. So, so we're really grateful for that. It's the catalyst that brought Silicom and Napatech together in our recently announced partnership. So thanks for that very much. We got a bunch of questions regarding the revenue aspirations and partnerships, and I'll try to cover 3 questions here in one chunk. I may ask Heine for a little help along the way, but we'll get to that point. It says, can you comment on the revenue aspirations? What is driving growth to over 30%? Along the way of that discussion, you have 73% revenue share from OEMs today. How do you expect this share going forward, given your revenue aspirations? And what can you say when you're investing in new partnerships? What kind of partnerships are you talking about? So this covers a couple of, I would say, pretty meaty topics here. I think we've covered it in multiple ways, but I'll try to summarize one more time. So as I've said before, in order for us to grow as a company, it really has to start with product strategy. You can always sell harder. You can always market harder. That provides a temporary bump in revenue growth. But the way you really get long-term revenue growth, which is what we're talking about here in this session, is you got to invest in the product. That's been our strategy really ever since I walked in the door. It's really been our strategy at Napatech really since the very beginning of time for Napatech. So it starts with product strategy. It's about having the right products that address the market needs in the market today and in the near future, and getting those products to market at the right time, not too early, not too late, but just about the right time. And I feel pretty confident that our investment in kind of the virtual opportunity is kind of just arriving at the right time. So we've been investing in this product strategy for years, but you can't grow the business on that alone. You also have to have a go-to-market strategy. And part of that is making sure that you have proper channels to the market, proper target customers in the marketplace. And we do that through our direct and indirect sales initiatives. But the partnerships is really where you get the enrichment opportunity. Partnerships can range from OEM type partnerships to go-to-market partnerships. And we put Lenovo, for example. Lenovo is, if you look at the classic definition of an OEM, Lenovo is an OEM. But it goes bigger and beyond some of the OEM relationships that we have. It's a partnership, and we classify it as strategic to the company in that regard, because we're collaborating with a product solution and helping them bring that product to market. We would endeavor to say that our Silicom relationship, although you might classify it as a classic OEM relationship, it goes above and beyond what we typically would say about our typical OEM relationships, because it's new, it's fresh, it's innovative, and it requires that level of collaboration that goes above and beyond some of the relationships that we have on the OEM side. So we do intend that these relationships will drive growth. They will also give us access to markets that we currently don't have access to, or don't have easy access to, just given the size of Napatech. We're leveraging and harnessing the size factor with partnerships like that. The Intel relationship is also a key partnership for us, not only from a platform perspective, but as we have announced a couple of years ago, we have been going to market with Intel with a software-only solution that runs on the Intel PAC cards that Jim Dworkin presented a little bit earlier in his presentation. And honestly, when I talk about earning a path to growth and unlocking the future of growth, there was a question or two on that, for questioning and even debating whether we've properly set the tone on that. These partnerships take time. And the fact that we put this in place with Intel, and we've been executing on that partnership strategy with Intel now for a couple of years, kind of unlocked the opportunity and kind of earned our way to the next level of growth through the platform relationship we have with Intel, and also getting our alignment in place with Silicom. So you can see this is a bit of a snowball. So the key to growth and how we get to 30% and beyond in revenue growth is really through the development of product, bringing them to the market at the right time, and building partnerships that get us access to the market that we currently can't get access to through our typical sales channels. And the last part of the question, I hope I've covered it in terms of what kind of partners are you talking about. As I had mentioned earlier, partnerships can range from OEM relationships to go-to-market partnerships that may not be necessarily classically defined as OEM, but the goal here is to get access to a large and growing market opportunity. There is a question, can you comment? This is a new question. I think this question probably is going in your direction, Jarrod. Heine, we don't have too many questions for you yet, so we'll see where that takes us in the next couple of minutes. But can you comment on the leverage you see with the SmartNICs reducing total cost of ownership? Is this a big enough driver over developing and deploying more servers to solve the growing demand for applications? How do you want to approach that one, Jarrod?
Yeah, thanks, Ray. When you talk to these the network operators that are responsible for the data centers in cloud, telco, and some of the new edge computing requirements, they're dealing with a scale that we've not seen before. We often call it hyperscale because it's just a massive number of computing elements, and at every point in their decision making, things like the cost per rack, the power and the space and the cooling all play factors. The sustainability of these networks is paramount. The single most expensive resource in those networks are the central processing units that sit inside of those servers. And when you're going to take on that expense, those computing resources have to be doing what they were intended for, which is either generating revenue, delivering apps and services, or being leased out to tenants in their business model. And so one of the key tenets of the Smart NIC is to offload those central processing units from the things that detract from its goal. And accelerators have been around for a long time. Many of us are familiar with graphics processing units, or GPUs, that sit right beside a CPU, offloading the burdensome video and graphics related processing. Now in modern data centers, where it is all about data processing, network processing, security processing, those elements now consume just an inordinate amount of the central processing unit. And your only alternative is to stack more and more servers, which require more and more processors, more space, more power, more cooling. So it's this notion of smart NICs that have come along to provide acceleration for all kinds of workloads. The folks at Intel have solutions for FPGAs that range from artificial intelligence to machine learning, other forms of video, Bitcoin mining, you name it, there's no shortage. We at Napatech, we're singularly focused on what we believe is the most burdensome workload inside of data centers, and that's the network and packet processing. And, in summary, across the board, in every use case where a smart NIC is deployed, the cost and performance benefits are easily demonstrable and measurable.
All right, thank you, Jarrod. We have about another 15 minutes of Q&A here. I want to try to get to the next Q&A very quickly, and this one is kind of directed more to Jim and Manoj. So maybe we'll give those. You guys can jump ball this one and see who takes it first. It says packet capture has become an established area for FPGA deployments. The growth and offload seems to be primarily driven ASIC-based NICs, while programmable NICs seem like a sweet spot for FPGAs, but also SoCs. What is the key use cases for a major step up in volume for FPGAs, which is envisioned? You mentioned 5G, but what else? Do either of you guys want to take that one?
Manoj?
Yep, surely. So as I mentioned in my presentation, this is like an evolving space. There are more use cases being identified. More use cases are coming up. More technology is being transferred to programmable adapters. So while the SoCs provide a fixed set of features and a limited flexibility in terms of how the processing, packet processing can be done, mostly at a software level, FPGAs have the advantages of the native advantages of the programmability within the silicon itself, and that is actually would be the big differentiator. So for the evolving technology adoptions in this space, I believe FPGAs will be more capable of accommodating it. At the same time, providing a very efficient and low latency packet processing or the data packet processing. So I believe FPGAs will have an edge over SoCs in the programmable adapter space.
Thanks for that point of view, Manoj. We tend to agree with you. Jim, I want to give you an opportunity to add any value there you may have or
Sure.
opinions.
Yeah, thanks, Ray. Manoj, being in the FPGA group at Intel, it would be hard for me to argue with you. However, as I mentioned earlier, we do have a portfolio and a number of different architecture types that we can, components we can bring together to address the needs of the smart NIC evolving market and some of the future stuff that I was also teasing earlier. So for the platform for cloud, one of the let's say killer apps or killer use cases that we've seen is the convergence of networking and storage. And so this can't be underestimated. And I think it should be intuitive to everyone listening how important storage has become in our new online and connected world. And there are I can't rattle the numbers off the top of my head, but whatever's higher than, orders of magnitude higher than petabytes, the amount of data that's created on the planet every minute, every day, every year is truly awesome. So the needs to analyze all that data and analyze unstructured data has become just a huge and growing problem and challenge for the market to solve. So for the evolution of the NIC market into smart NICs, that's one of the most killer applications, is to use the convergence of networking and storage use cases and transports to solve that problem, among others. Of course, AI is a big one. Security is a huge one too. So just simply supporting a bare metal service as a cloud provider, which means you rent out the entire server as if it was the customer's server, but you have a NIC plugged in there into that server. So it's important, it's critically important for the cloud operator to retain control over their own network if they're going to rent one server out to one client and then another server right next to it on the same network out to another client, and make sure that they're not damaging each other, damaging the network, their security threats, and so on. And Napatech is so well positioned in that segment. And historically, and driving use cases that work in the security realm. So security, networking, storage, those are all some of the killer apps and use cases that are driving forward the smart NIC market into the future. And there are, as I said earlier, there are other ones that are coming soon. And we here at Intel intend to stay very close to our partners like Napatech in order to develop those, so that this is a long-term growth segment that Ray, you were talking about, okay, and sets us up for success jointly in the future.
All right, super. Thank you very much for that point of view, Jim, and Manoj, super helpful, and thanks for that question also. We've got a few others popping in here. The next one is back to Silicom, and then there's a follow-on question regarding our software-only solution. I'll try to cover the first one, and then maybe Heine and I can collaborate on the second one. Silicom's FPGA cards compete with yours. So which advantage do you see when partnering with Silicom and giving them access to your IP? Silicom cards do not come with an IP, so I don't think this gives them an advantage in terms of hardware. What do you think about that? Well, as Jarrod talked about, and you've heard us talk about a couple of times in regards to what we bring to market, the software that we're developing on top of our hardware offering is really kind of the secret to our success. We consider it a key strategic advantage to Napatech, that you're not just investing in a hardware company, but you're investing in a software company that delivers its software on hardware, both on a platform level and also the platform that we build ourselves. So we think this gives us, I think, a unique opportunity to not only grow the market, but also maintain our gross margins as we go forward in that marketplace. So we made a decision to build great smart NIC hardware solutions for customers who need to buy the hardware software combined. But it makes a lot of sense for us as a company to exploit the position we have with software. So we validated this strategy with Intel a couple of years back through the programmable acceleration cards that we sell on, that we still are in market with Intel, and we endeavor to do the same with Silicom, that we intend to engage at that level. The relationship that we have consummated with Silicom is really to combine our best-in-class IP with their best-in-class solution built on the platform that is put into the marketplace by Intel. And we see this as a win-win solution. We don't see this as a competitive situation or giving a competitor a leg up in any way, shape, or form. As we've communicated, this market has plenty of headroom for all of us to exist and flourish and grow. And we want to activate all of the different channels to the marketplace that we can activate to engage that growth opportunity in the marketplace. So we see this as a market expansionary opportunity for our company, and we're not, kind of giving it away, if you will. We're engaging a partnership here to grow the opportunity for both companies. The next kind of related question is, could you speak about your software solution as a standalone product? Explain a little bit more about the advantages of your solution versus others. Which market potential do you see for that product in terms of potential for revenues, in terms of recurring revenues? Also about the gross margins for the standalone. What is your gross margin strategy for standalone software? So that's a very loaded question. I think we could spend the next 30, 45 minutes talking about it. I'll try to encapsulate very quickly. I'll let Jarrod comment a little bit as well on this one. And then maybe Heine, you can talk a little bit about the gross margin vector for the software-only product. So the software-only solution as a standalone product really is has really been part of our strategy for a couple of years, as I've already said. And I don't want to repeat myself too much for brevity of time. But once again, it's the key to our success is delivering a solution that our customers want to consume right now that adds real value. And in order for a smart NIC to do what it needs to do, it needs software. A smart NIC alone cannot perform the duties that it needs to perform in terms of accelerating applications and making them better at what they do without the software that we build on top of that hardware. So it is a strategic advantage for us to use that asset as a go-to-market and growth opportunity for the company, and we've been looking for ways to unlock that. And it's a rather progressive, innovative way of going to market. And I hope our investors give us some credit for doing this. We could easily go to market in the same old-fashioned way we've done for the last decade and a half as a hardware solution with some software that happens to add some value. Rather, we're taking a different path with our software standalone solution as leading with our software as the key differentiator for a Napatech solution, and leveraging hardware solutions across the industry to get us access to that market. So once again, it is very, very important to us. We're aspiring in the aspirations recommendation to a product mix that begins to see more software over time as the product mix evolves, and we think we've taken a few steps here in the right direction. Jarrod, do you want to add anything to that commentary?
I can. I would just say that we heard from Manoj today that an increasing number of the NICs deployed are going to be programmable smart NICs, and we know today that the majority of those NICs, more than 70% of them today, are based on FPGAs. So we think we've made the right technology decision, and that trend will continue. So outside of Napatech, there are tier one global multi-billion-dollar companies as well that develop FPGAs, as well as server companies that have a vision for an FPGA to be deployed on every server. It'll be a standard offering, and our perspective on that is anywhere that those FPGAs live, either in accelerator cards from Napatech, other boards from third-party companies, even FPGA technologies embedded inside of CPUs. Anywhere there's an FPGA deployed in the data center, that's a home for our software and a place that we can help those servers run faster or better or more efficiently.
All right, great. Thank you for that. And Heine, do you want to comment about the gross margins associated with software as a standalone product?
Sure. Thanks. We don't have any third-party software components as part of our software solution. So software only revenue would basically be 100% margin for us. So of course that's like a big part of why we feel comfortable about the future expectations to our overall gross margin for the company. So software only is 100% margin.
All right, that's a short and sweet and good answer to the question. Just looking at, we have a couple other questions that have come in. Let me see if I can articulate them. So this one kind of goes towards the Intel direction and Omdia direction. So I'll just read them, and Jim and Manoj, I'll just let you comment on them if you see fit. So So this one says, for Intel, how many suppliers do you work with in your strategic ecosystem? Are they complementary or used for various solutions? So that's the first part of the question. Jim, do you have a point of view on that?
Okay. Yeah, I mean, I'll presume that the question is related to the Cloud SmartNIC platform, and maybe just related also to our PAC card program, because obviously, Intel works with a staggering number of partners globally. But for our business and what we drive for the cloud platform, we have been public with Inventec and Silicom. Inventec building the initial hardware, and Silicom being our first what we call solution integration partner. That's the one that creates the orderable product for the end customer. So we have a strategic direction and vision to have, I guess the right word would be a handful. We're somewhat practically limited at the moment as we Intel support our platform to the next level of partner. In this case, Silicom being that solution integrator, and obviously you have that partnership along with Silicom for that. So I would say a handful is what is practical in this generation of the platform for us to scale out. But we're generating strong momentum with that, and we intend for all of our platform and solution integration partners that we will eventually have with this particular 2x25 gig platform to come along with us into the 100 gig and higher link speed and higher performance per watt versions of the platform in the future. So that's kind of the scale of the thing. I think, Ray, it was you that mentioned the snowball. So that's the effect that we're looking to go for here. And yeah, that's our strategic intent.
Yeah, thank you. Thank you, Jim. And I think we're coming up close to the end of time, but there's one question that is a follow-on question for Omdia. And Manoj, I'm curious if you would be willing to comment on this. It says for Omdia, Manoj, you said Napatech has a potential lead from a product perspective. Can you explain that point that you made in your presentation a bit further? It'd be very interesting for investors to hear.
Yeah, of course. So I analyzed various smart NIC providers in this market or programmable adapter vendors in this market, and there are multiple types of vendors who's playing out in this space. One is vendors who provide just the hardware platform for third-party ISVs or other solution providers to build software on top of it and provide it to the end customer. And there is another category of customers who provides both hardware and software as an integrated package. And there is another category of products, vendors who provides only the software part of it, but primarily buying the hardware part from a vendor like maybe from Intel or from any other hardware service provider or hardware provider. So when I look at all these product categories, all these vendor categories, those vendors who are providing a hardware plus software solution, which is very tightly coupled with software and hardware, has a larger customer appeal. And you have to remember that the end customer does not have a huge engineering expertise or technology expertise to to deploy and operate these cards. So they are expecting a package which is easily deployable, low maintenance, and what it just works off the shelf. So the vendors who provides these solutions as a single package from with a highly optimized software running on a highly optimized hardware always have a larger customer appeal. So I'm talking about the customers outside of the hyperscale cloud service providers. Hyperscalers have got their internal engineering and technology expertise to optimize the software, port the software, and build on basically the off-the-shelf hardware. But those enterprise customers or the telco customers do not have those engineering expertise to deploy or to deploy Ethernet adapters integrating various technologies. So that is why I like Napatech, who's providing a highly optimized solution to vendors, combining the best of hardware and the best of software.
Thank you. Thank you for that. I really appreciate your point of view on that, Manoj. I think we've exceeded our time limits here, so I'd like to bring this to close. First of all, I want to thank Jim and Manoj for joining us today. I'm super grateful for the partnership that we have with Intel, and we commit to Intel to continue to be a great partner in the ecosystem partnership community that you're creating, and we will do everything we can to exploit the position together and win going forward. Manoj, your data that you provide to us is extraordinarily important. It adds a lot of color to the opportunity that we have going forward, and we always feel very aligned with the data that's coming from you, which is highly independent, and we need that independent source. It also offers a lot of questions for our investors. Thank you so much today for providing your point of view on that. It's super helpful to us, and we look forward to seeing more data coming from you as we keep growing our market opportunity. I also want to thank our investors for participating with us today. I know these virtual events can be a little bit challenging sometimes. We hope we've made it interesting for you. We really are trying hard to be as open and transparent with you about the opportunity. We feel very good about our business. We feel confident that we are making all of the right calls. But of course, you know, this is still a work in progress. I commit to you from a Napatech perspective and from a leadership perspective that we have in Denmark and around the world, that we're going to continue to execute the best we can on our strategy going forward. And I will also commit to you to be open and transparent about the opportunities that we see ahead of us. You're seeing us be a little bit more optimistic about the potential here, but we've earned it. We've put the pieces in place to do that. We didn't have the chance to do that a few years ago. We even couldn't do that last year. We had to put a few years of execution between us and the past to be able to earn that respect, to be listened to in this regard. And we're doing everything we can to bring an opportunity to our investor base that we think is compelling and interesting, and we'll continue to do our best to execute on it. So with that, I'll bring our 2021 Capital Markets Day meeting to a close. Thanks, Heine and Jarrod, for your participations as well. And we look forward to seeing everybody in future meetings and endeavors in the near future. So thank you very much and have a great day.